Hey everyone, let's talk about CrowdStrike's major stumble and what it means for investors. So, CrowdStrike, the cybersecurity heavyweight, saw its shares drop a whopping 13% on Monday. What's going on, you ask? Well, it all started with a massive tech outage last week that took millions of Microsoft Windows devices offline. Early on Friday, CrowdStrike pushed out a botched update to its Falcon vulnerability protection software. This defective update caused PCs, computer servers, and even display screens to crash. It was chaos. Grounded flights, canceled medical appointments, you name it. Microsoft mentioned that around 8.5 million devices were impacted. That's less than 1% of the global total, but still it was a big deal. IT staffers scrambled to fix the mess while hackers tried to exploit the situation with malicious websites masquerading as software updates. CEO George Kurtz even went on air with CNBC's Jim Cramer to address the crisis. But the damage was done. CrowdStrike shares initially fell 11% last Friday. Then, over the weekend, social media was flooded with images of the dreaded blue screen of death. People were understandably frustrated. CrowdStrike announced on Sunday that they were testing a faster fix for the impacted machines. But the fallout continued. Guggenheim Securities downgraded CrowdStrike's rating from buy to neutral. Analysts, led by John DiFucci, noted that the stock was trading at the highest multiple of recurring revenue across their software coverage. They warned that it might take time for CrowdStrike to repair its image, and this would likely hurt new contract signings. They did, however, express confidence in CrowdStrike's leadership and its potential for long-term recovery. They suggested that investors with a multi-year horizon might be able to ride out the storm. But for now, they advised caution. On the flip side, Goldman Sachs maintained their buy rating on CrowdStrike shares. They did predict that deals would take longer to close due to the outage's timing, right before the end of CrowdStrike's fiscal second quarter on July 31st. Analysts pointed to a similar incident in 2010 with McAfee, which also involved George Kurtz, to provide context. The McAfee outage had a significant revenue impact, but was eventually followed by Intel's $7.7 billion acquisition of McAfee. In a regulatory filing on Monday, CrowdStrike admitted that the situation is still evolving and that the impact on their business is still being evaluated. So, what's the takeaway here? For investors, this is a time to stay informed and be cautious. CrowdStrike's long-term potential remains, but the short-term outlook is uncertain. If you found this analysis helpful, hit that like button and subscribe for more updates. If you want a daily dose of trending topics, don't forget to like and subscribe. Thanks for watching and see you next time.